In this video, we're going to talk about what happens if you fall behind in your Chapter 13 bankruptcy. Hey all my homeowners, this is Joshua Sternberg from Sternberg Law Group coming at you from sunny Southern California. So, a little bit of education. In a Chapter 13 bankruptcy, often called a reorganization of debts, you are required to make monthly payments to the Chapter 13 trustee. Let's, for this conversation, say that those payments are $1,000 a month. That means for the term of your Chapter 13 bankruptcy, which is typically 60 months, typically 60 months is the longest you can have your bankruptcy for. You can do it for shorter, but let's assume again that we're doing a $1,000 bankruptcy for 60 equal months. That's $1,000 a month for 60 months equals $60,000 paid into your bankruptcy over 5 years. The question is, what happens if I fall behind on my bankruptcy payments? Okay, because a lot of people say they get scared. I've paid so much money, I've done so much good, but I'm gonna miss this month's payment. My car broke down, I'm in between jobs, it's Christmas time, I just don't have the money to put together. You should not be concerned if you're only missing a couple payments in your Chapter 13 bankruptcy. The reason is what will happen in your Chapter 13 bankruptcy is the Chapter 13 trustee will file a motion to dismiss your case. If they file a motion to dismiss your case, they will give you a window of opportunity to address the failure to make plan payments. The motion to dismiss your case will be called trustee's motion to dismiss case for failure to make plan payments. In this example, let's say you missed 3 straight plan payments, so you're now delinquent $3,000. We should stop here and let you know that there's no interest, no penalties in a Chapter 13. So if you fall behind, it's not like they're gonna want extra money. You're still gonna pay that agreed upon $60,000 over the 60 months. There are Chapter 13 fees, there are administrative fees, there are attorney fees, but that should be made up within your $1,000 monthly payment. If you do get a trustee's motion to dismiss, what you can do is you contact your attorney, you have them file an opposition to set it for hearing. What that does is it stretches out the amount of time you have to deal with the default. And then you can file what's called a motion to modify plan payments. In California, we call that MOMOD, M-O-M-O-D. It's motion to modify. And what we would simply do in that MOMOD is we would take the amount you're behind, $3,000. We would then put it into the remaining bankruptcy payments and spread it out over your remaining months. So let's say you're in month 20 of your bankruptcy, which means you have 40 months left. We'll take the $3,000 and we'll spread it out equally over those 40 months. So let me grab my calculator. $3,000 divided by 40 months comes out to $75. In this example, your bankruptcy payment was $1,000 per month. With the $75 additional to make up the $3,000 that you're behind, your new plan payment will be how much? Exactly, it will be $1,075 for the last 40 months of your plan. Because by paying an extra $75 a month for the next 40 months, you will pay them $3,000 that will make up the $3,000 payments that you missed prior. So if you fall behind in your Chapter 13 bankruptcy, don't go crazy because you can file a MOMOD. The problem would be if you fall behind in your Chapter 13 bankruptcy and you're in a financial position where you can't make any payments and you can't make up the arrears. You can't make up the defaulted amount. That's problematic. Just like in most things in life, if you have a hardship that ends, you can pick up. But if your hardship is going to be continuous, you could be looking at having your Chapter 13 bankruptcy case dismissed. So in that case, you should contact your attorney, let them know as soon as possible that you may have a trustee's motion to dismiss and that you don't have the funds to make it up, because then you and your attorney can put your heads together and strategize on whether or not you need to file again, or you not need to hold off. Maybe you can try a loan modification. There are still some options for you, okay? So again, Josh Sternberg from Sternberg Law Group. I sincerely hope that this video was helpful. If you have any questions, please drop them in the comments below. Subscribe, like, I would really appreciate that. Talk to everybody soon. See you soon. Thank you so much.